Welcome to the Transparent FX Academy. I'm Nick and I'm a top author and trading view with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently approaching a quite strong historical structure level for this market. This area was in fact already acting as support here, preceding all these massive rejections to the upside. Again, was respected here as support with the market creating this green candle. Then we had the break below, break back above, retest, once again respected as support. And at the moment, the market is testing this exact same area. As we're testing this zone once again, we could expect the market to respect it and create bullish price action away from the area. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, there is one very important pattern that we have to pay attention to. In fact, we can see how in creating this move to the downside, the market is also currently creating this M pattern. And in general, after the creation of an M pattern, what you would expect is for the market to create a rejection to the upside to go and complete the pattern at the neckline, which is the previous support turned resistance from a weekly perspective. So by looking at the market here on the weekly, there is a possibility to see bullish price action for the completion of the M pattern, which at that point would also reject the monthly support and demand. So here on the weekly, everything looks pretty bullish. It's also important to keep in mind that we have an impulse and correction. In general, after an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see that at the moment we are in between the 0.618 and 0.786 Fibonacci retracements, which are the last reversal zone from which there is a good chance to have bullish price action being developed, considering that we have also seen how on the monthly we have support and on the weekly we have the M pattern. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, first of all, I did speak about EURUSD quite a few times in the past. I spoke about it when the market was around this area. I explained all the reasons for which we could expect this rejection to the upside. Again, from here, I explained all the reasons for which we wanted to see the creation of a higher high, which the market gave us. Then we had the creation of this M pattern. I explained all the reasons for which we wanted to see the completion of the M pattern at the neckline. Then we had this impulse, we wanted to see a correction and continuation to the downside, which is exactly what the market just gave us. And by the way, I will link in description all these previous analysis, so you can go and check them out for more free education. Now, at the moment, what we must notice is that even though monthly and weekly are bullish, from a daily perspective, we still have a bearish market. In fact, this market is still creating lower lows and lower highs until the market will remain in this situation with bearish structure, creating lower lows and lower highs. We could expect more bearish continuation. So what we need in order for the market to shift to a bullish market like we're already seeing on the monthly and weekly is a daily break of structure. Now, the nearest structure level is this previous support, which is now term resistance. Until the market will remain below this level, it could easily reject lower. However, if we get a break above this resistance, this previous resistance would become support. And on the retest of the previous resistance turn support, this is where we would have very good probabilities to see more potential bullish continuation away from this area. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, so the big players in the market, and we look at the net positions, we can see how with the last reports we went from 143k net positions all the way up to 173k net positions. So this shows how in the long term net positions are getting increased, showing how institutions have been increasing their longs and decreasing their shorts. We went in fact from having 215k longs all the way up to 250, and now we're starting to get decrease going from 80k to 76k. So overall the euro is getting bullish from an institutional perspective. And keep in mind that if we're checking the data for the euro, we're actually already checking euro USD because all currencies on the spot are traded against the USD. So moving back here to the technicals, if the market will break above structure on the retest, we would have good probability to see more institutional longing inside of this zone, from which then more bullish price action could be created. So if we do get the break on the retest, how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program, you open an account with them from your student dashboard, you can get a full refund credited back into your trading account. And if you scroll over here, you will see that there is still time to join before the offer expires and price goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.